There's a new way to stay connected and know what's happening with Market to Market when you subscribe to Market Insider. One email and a lot of information awaits you. Go to markettomarket.org and subscribe to Market Insider. Welcome into the M2M podcast. I'm Paul Yeager, your host here, and we are going to break down the commodity markets a little bit as we look to 2025. This is coming out on the last day of 2024, so why not look forward? We don't need to review the year that was. Let's look at the year that's to come. What factors are in play when it comes to our global partners and our global competition? We're going to go to Wisconsin today, and we are going to talk with Josh Hayes, who's the COO of a firm called Hedge Plus. The name should tell you that Commodities is in the game. We're going to learn a little bit about Josh, how he left the business, went on a mission, came back, find out how that all transpired, and then get his views on China, Brazil, Ukraine, Russia, Mexico, Canada, and of course the United States and the American farmer. We'll find out, get a few price ranges from him, and we'll learn just a little bit more about what's from his vantage point of what's ahead here in 2025. This is the M2M podcast, a production of Iowa PBS and the Market to Market TV show. New episodes in the new year will also come out on Tuesdays. And in the new year, a new segment. We'll tell you about that on the end of this discussion with Josh. So how does a guy from the suburbs who lives in the big city ends up in commodities, Josh?
Well, it's turned out to be a family business. Patrick Hayes, my uncle, our owner, he got into trading commodities on his own in the 90s and had some, pretty good success with it. And found that, as the more he traded, the more he learned about the business and farming. And there's actually quite a few farm marketing firms in the southeastern Wisconsin area. And he joined up with one of those and got really good at it and branched off on his own. And we actually opened up on our own in 2007. That's when I joined him at first.
All right, so 2007, that's pre Great Recession. Economy's still kind of cooking along. So early on in your career, you're dealing with this ridiculous thing called the Great Recession. That didn't scare you away?
No, not at all. We thrived through that period. The only thing that actually took me away for a while was my own, I guess, desire to be an entrepreneur. And it was the bug I caught from Patrick, I guess. And so I went off on my own in the mid 2010s and got into real estate and had some success there, running my own business, starting a business there, and learned a lot of things just about running a business in general, which is what brought me back to Hedge Plus this year.
The entrepreneur side of things is always fascinating to me. So were you one of those guys that had the lemonade stand as a kid and you've just never looked back?
Yeah, absolutely. Definitely had a lemonade stand and definitely tried my hand at quite a few businesses. And, watching Patrick start up Hedge Plus and being a part of that, it definitely inspired me. And real estate was something that you can kind of start on your own, like I did, and work for brokers. I learned a lot of different. I'm a person that tends to find new ways to do things, I guess, and that's what I did in real estate. Created a niche out in Las Vegas that helped me to grow a business there, and learned a lot about looking after a business, growing it, marketing yourself, hiring employees, managing employees, and that's something that we had a need for here. That's where Pat called upon me. I actually kind of admire the way he's approached Hedge Plus this whole time. Is when we didn't have somebody in place to do what I'm doing now, growth was on the back burner. He's always kept his focus to this day. He's our primary decision maker on cash sales and hedging related to cash sales. And when there hasn't been someone to fill the role I'm filling, those things about growth and marketing and even dealing with websites and that kind of things, those all went by the wayside. So he never tried to wear two hats at the same time because it's really detrimental when you do. Yeah.
We'll get into you and your day to day in a moment, but I also need to finish my parallel thought here. You as an entrepreneur, farmers are entrepreneurs. I mean, there is a lot of individuality and everybody's different, but everybody's also trying to find your niche. Is that an accurate comparison?
Yeah, absolutely. We think it's best to really focus in on what you do best, not get too broad based or too diverse, and to really become an expert at one or two things as opposed to trying to be an expert at everything.
Well, there's some expertise. Sometimes though, you have to do a lot of hats or wear a lot of hats. I mean, and do a lot of things. And so yeah, there. But at the same time, if one thing's not your focus, if maybe not understanding the grain marketing is your thing, it's best to call somebody who might be able to help you out.
Yeah, exactly. I definitely give farmers tons of credit. They are great at growing the crop, and I also believe they're definitely great at following the markets. It's just how could they possibly give it as much time as we do? It's what we're looking at every day, all day, year round. And I think what that really helps us with the time since I've been back, it's really helped me to spot things, ahead of time. I'm not calling, major events ahead of time, but I can kind of see where trends are going. And we have a real collaboration here where everybody's, weighing in. And, well, Patrick is our decision maker. He's taken in information from all of us and helps shape the direction of things that we think they're going. But yeah, I can't imagine trying to stay on top of everything, though, everything that's going on in the world, everything that's going on here, changing markets, developing markets, where acres are headed. I can't imagine keeping on top of all of that and doing what farmers do every day, just growing and being producers.
Have you adopted the phrase "the trend is your friend"? Then
Yeah, absolutely. I think actually, if you look at a broad-based picture, which I know we'll get into more later. I kind of see we're kind of headed back to more of a trend. We're coming off of wars and pandemics, and keeping an eye on the big picture is very important. And we can have periods that last years, decades, where we're in smaller ranges. And when you're in smaller ranges and you're dealing with smaller margins, you really kind of have to spot the smaller ups and downs that are coming during those time periods to really make a profit and to capitalize on the quick bursts up and down. And more normal market like that, which we're kind of falling into already now. And so, yeah, we have to be able to spot those peaks and valleys and see them coming.
what's a typical day like for you, Josh?
I'm the first one in. Uh, I, uh, I'm the person who's, I guess, we talk about many hats. I'm the person that's, not only doing with the sales side of our business, but the marketing. And we didn't have an X account prior to me coming back, and so I started that up. And so, if you follow us on X, which is at Hedge Plus WI, that account's mostly going to be what I'm putting out. So I'm putting out, the first thing I work on is our what I call is our what we're weighing today. So it's just weighing the market factors, the latest things driving the market. And what I really do find valuable from that, it's not about the news items so much. It's man, you really get a sense for you write that every day and you get a sense for what seems to be really important, and just the general direction things are going. You start to notice that, wow, there's no bullish news that's doing anything to the market, and the smallest bit of bearish news is causing prices to drop, nothing crazy, but it just you get that sense of kind of the overall feel of where the market's headed. And by doing that every day, and that's how I start the day. And then, keeping track, I post prices both at the pause in the morning and at the end of the day. So I'm staying on top of prices, staying on top of other people's viewpoints. I'm not like a collector of information. And then throughout the day, I'm working on making our business better, improving our website and things like that for our clients.
It sounds like you're more in the fundamental side of things than the technical side of things when it comes to looking at the markets.
Yep, that's my starting point. I am going to be starting to pay a little bit more attention to technicals. It's something I definitely come across from the people I'm listening to and following, and it's definitely something I look at. And I know our guys here are big on technicals, and so I'm going to be taking a closer look at that myself and trying to find the right meshing of the two together for sure.
Overall, big picture right now, the wheat market has been, when you talk about negative news, it doesn't look like any time that there's rockets or bombs thrown at one country between Russia and Ukraine that the market responds like it once did. So what's at play in that market right now for wheat?
Yeah, it's just sure. You kept expecting when there would be any, escalation. Recently, you thought the markets would react to it, and it just was nothing at all. I think I think what everyone's starting to sense, and not just in our business, but around the world, is that I think with the change at president with Trump coming in, I think even Putin, I think Russia, I think they see a finish line. I think they see an end to this. Um, you could tell by what Putin's responses were to the actions we've seen the past couple of weeks, where it was long range missiles were authorized for use by Ukraine and using American and British weapons and those kinds of things. It seems like Putin was really trying to hold off. I guess I wouldn't say taking the bait, but he didn't really want to fall into that escalation so close to when I think he senses maybe a favorable deal coming when Trump takes office. And so, just in general, we're just kind of seeing what took place, in the late 2020 to 2023, 24 range, where the markets climbed based on pandemics and this war. We've started to see all those factors kind of be sifted through and work themselves out, and I think we're falling into more traditional ranges. And so, barring a black swan event, another something unforeseen, which it's called black swan for a reason, because it is unforeseen. We think we're going to be falling more into like your typical $1 range with wheat. So instead of maybe $5 to $6, like we were in a range from 2014 to 2020, account for a little bit of inflation that's kind of built in. And so we're looking at prices probably within a range this coming year in the 550 to 650 range is where we think wheat will rest for the most part, barring anything crazy or weather.
Corn has become more of a market that is dependent a lot on what happens inside the United States. Throw in, though, you mentioned Trump returning to the White House. He's already thrown big shade at Canada and Mexico, trading partners 1 and 2 when it comes to corn. The market did respond a little bit negatively initially, but we believe the president-elect is one that is just setting a position, and he's negotiating for something else. So, not saying that Mexico is going to go away as a client, but if it's hampered or dampened or challenged, does that put a challenge on corn in 2025?
Yeah, definitely. It's something we're definitely watching for, but not expecting. Okay, um, we look at the trade imbalance between the United States and Mexico. Something I wrote about last week for our clients. It's just leverage. It's leverage for Trump. It's leverage to get a desired result. I mean, look what he's using it for. He's looking using it the threat with both Canada and Mexico with tariffs to have them close the borders and stop the flow of immigrants and drugs into the country. He's not even trying to use that leverage to do anything else with trade. So and if it appears as though it was, like you said, immediate reaction, and steps appear to have been taken immediately. I know Mexico has made some immediate arrests of some cartel arrests and some major drug busts. And so yeah, I mean, look back to the way Trump utilized the threat tariff the first time around. Yeah, there were some tariffs implemented, but bigger picture would be just to get a desired result. So it's something we have to watch out for. It's definitely something we think we'll see coming if it comes to that. But right now, I wouldn't expect any kind of threat to Mexico as a buyer of our corn.
Does corn in 2025 move more independently, or is it going to be at the whims of whatever happens, Mexico, Canada, China, Japan, wherever else? What controls corn the most next year?
I think there is definitely a shift to more independence, but it's still going to be, I think, weighed down a little bit by wheat. I mean, I don't think you can get those two separated too far from one another because it's both feed grains. But yeah, the corn is probably, I'd say, of the three between corn, soybeans, and wheat, it's probably, we feel like it's on the most stable ground. The fundamentals are strong there. Demand is strong. It was nice to see in the December report from the USDA those adjustments made to carry out and demand, and that we just think that the fundamentals for corn are on the most solid ground. Maybe wheat has more room to run. Corn, like I said, if we put a range on corn, if we go back to the same 2014 to 2020 range, you may be looking at a 350 to 450 range. So now, again, counting for a little bit of inflation, we feel like the corn range for 2025, or at least the first half of 2025, we feel like the range on that is between $4 to $5. And
Okay.
within that
Oh,
range of $4 to $5, we're looking at, that's still a dollar. So we're but that's what we're keeping our eye on for sales, is to make sure that when we see prices hit the upper end of that range, that we're taking advantage of that, on our cash sales.
really, since the end of harvest, the movements in corn have been much more pennies than dimes and quarters. And so it is back to kind of the way it has been. Do you see, I'm not gonna set the table on soybeans this time because I want to see what you think is the biggest story as we get into 25. And then I'll chime in and see if I can lead you down a path.
All right, sounds good. Yeah. All right. So two big factors there. That's where soybeans have had, at least here, have had the biggest challenges. Right. That's what we've, I guess, pinned as the key word for soybeans, is it's the most challenged. So you've got South America growing, more crop, bigger crop, more acres, and as of yet, no weather issues. That's the big thing we'll be watching for in South America, is any presentation of weather issues. We're still talking ranges. We're talking on soybeans, instead of a $9 to $11 range, more of a 950 to 1150 range. And those moments when we push 1150, we would expect it to come with some sort of weather issue. Now, if we see weather issues in South America here soon, then maybe we'll see that come in the beginning part of the year. Or if we end up with weather issues of our own, we maybe see that later on in 2025. And then also you've got what's happening with China. And that is, with soybeans, that's where Trump's tariffs had a bigger impact. When those tariffs came about in 2018, we really dropped quite a notch lower in those price ranges. So those tariffs had a direct impact on soybeans, and so it all depends on what comes about with China. I do think China is in a not quite as strong a position this time around, and so maybe there won't be such strong retaliation, or maybe that there's just more willingness to work together and come to a deal that works, where maybe Trump doesn't have to offset the retaliation with credits this time around. I'd hope we could avoid that. And I just see China's economy is in a weaker state this time around. They seem as though they're probably going to be more willing to work out something that works for both sides. Maybe we can get them to stop sending so much used, cooking oil over or whatever it takes. But I just think this round will probably go a little better. People forget, everyone always looks at it from the perspective of China. I mean, I even saw people, uh, panic about what Mexico might do in retaliation or Canada. Even with China, we are our buying of their goods represents about 13.5% of their economy, and their buying of ours is about 7%. So there's still an imbalance there and some leverage to work with, even with China. So in general, I just don't think the negative impact will be as great this time around.
But to me, there's two factors that are maybe different this time. Is that the United States has learned how to work without the China business, handle and respond without as much China business or dependence, I guess is really the word. Do you think that is true? We're not as responsive to a cancellation by China of something out of the PNW or a change politically or something there that maybe we were 8 years ago or 12 years ago.
Yeah, I sure hope so. And I would hope that Trump's got to be always looking at, or anyone who's making these decisions has to be looking at. If I hold my ground on this, where can we make up for it? So if China buys fewer beans, which they are anyway, I mean they've invested so much into South America in the last 5 years to be able to help South America grow more soybeans so they can buy them from South, and then they've done that to improve their leverage, right? So I would think that anything we do shouldn't ever just be done haphazardly, and I don't think that was the case, the first go around with Trump, by the way. So I would think, okay, well, I'm sure Chuck Grassley has his ear, and maybe we put more emphasis on biodiesel and opening up avenues there, and promoting our own production that way, and doing shifting alternatives. And then on the producer side, I think we're going to see more corn acres. I think everybody's predicting that. So I wouldn't go so far as to say that we're going to just start being a corn producing nation and let South America grow all the soybeans. I think the American response will be, to explore, different uses for soybeans. And I think the immediate steps you can take are policy decisions that open up that market and remove some restrictions. And I think that's what we'll probably see.
And to me, you've opened up a worm there that I would want to, because there's been a theory floated around of maybe the U.S. does just get out of the soybean business. But yes, we still have domestic demands and industries that are dependent on that. But what about this whole notion? This is the second part of my China thoughts is, what if it's just Brazil and China just do business and cut us both out? I mean, we don't really import that much from Brazil anyway, or South America. But if you're China, why don't you just go with the path of least resistance? I don't want to have to change my actions. I don't want to have to abide by certain rules. Brazil's not going to complain. What happens in that scenario?
Yeah, well, two things. One, I would hope that it would not come to that. I think that's where Trump uses his leverage and, make sure that China doesn't go to that extent, right? But you can't fully control. I mean, I think we have enough leverage to prevent that. But yeah, we've got to open up, new markets. And I think I read, the USDA. Don't Some of it, seems like fluff pieces, and they talk about the trade missions they're on, but there is important information in those, and that we are looking to expand markets, and we're constantly. I think we're in. I want to say it's. I think it's Africa right now, trying to encourage Africa to buy, their soybeans from us. And yeah, so there's policy decisions that can be made. I think that can help shift some of that. But my boy, you can't just replace China's demand by that alone. So yeah, that's why I can't imagine with farmers are a big part of Trump's base. And I think I saw someone maybe suggest that, well, this is his second term, and maybe he won't, be as mindful of the consequences of some of these threats and actions. I just don't see that. I think, there's always ego and legacy there. And also, I just don't think he wants America to lose at anything. So I think he's going to be careful. And I think, I really just don't think anytime soon, at least, we'll have to face a situation where China is getting all of its beans from South America. Long term, maybe. Short term, I'd be more worried about China's economy weakening than anything. That's my biggest concern with China. And I'm not so much worried about, as seemingly everyone else, about any kind of retaliation from terrorists as I am just in general. China's economy is weakening. I think we're seeing signs of that right now. They're buying a little bit more from us right now than last year, but they're buying way, way less from South America. And I think that's a pretty good indicator that their situation's maybe not as good. These stimulus packages just haven't seemed to work at all. And market always seems to love the announcement of stimulus, but give it a few days or a week, and it just doesn't seem to do anything. And at what point do we take a look at things and say maybe the problem there is bigger than people realize?
Well, I think everybody likes to hear stimulus in other countries. It doesn't seem to go over well when they talk about stimulus in the United States, because we don't
Right.
want to we don't want to print more money and put it into the. It's an interesting dichotomy to me, and how we're kind of talking out of both sides there a little bit about, oh, it's okay for them, it's not okay for us. Anyway, you talk about developing new markets in livestock. That's long been a play for the beef and the pork producer, trying to find new places to sell pork loins and steak and hamburger and beef. What do you see, cattle and feeders? I mean, we've been on a heck of a run
Yeah.
here. Does this thing still have upside to go in 25?
Yeah, I think I don't want to sound too pessimistic, but we're already starting to see the same pattern with hogs. We're coming off of those, the inflationary aspects, and again the pandemic and wars trending towards a more normal ranges, normal market. So I see that same slow drift down into typical ranges that we saw from 2014 to 2020. But wow, cattle still up there, at the highs. And there's supply issues there that we just don't see in the other markets. So but I do we look at the livestock markets as a leading indicator. So we had all this money pumped into these economies, and still seeing it in China right now, right? So when does that effect finally subside? And so we think basically what we're telling our guys, and Jason Gaylor here is our livestock guy. He's great, and definitely follows those markets. He's basically looking at with hogs. You've got hogs sitting around $100 on the summer contracts entering the year, and that's not typical for this time of year. We usually typically see that when we get to summertime. So we're encouraging forward pricing now into those summer month contracts. And on the cattle side, we're encouraging more of taking advantage of prices where they're at now, and not to get too greedy, because as these economies slow down, if they do, which is what we think is happening and we're seeing signs of, that's going to be one of the first places it shows up, and those markets really start to fall down. And how can you argue against record highs, right?
Well, and you said something there that I had a flashback to old Walt Hackney saying it's hard to lose money taking a profit, and if that price is profitable, you have to take it
Yeah.
before you flip it, right? Yeah.
Yeah, exactly.
All right, cattle market. You talked enough about the hogs. There's a little bit of intersperser there. What are you hearing about expansion in feedlots? Are we holding them longer? Are we making them heavier? Is that what the anticipation is going to be here in 25?
Uh, yeah, I just talk about pasture conditions improving, but it's always a battle for land. So uh, that's the fear is that I mean you've got in the cattle market with fewer producers. It's a tough business, right? So uh, that's the greatest fear is the smaller amount of producers, controlling price direction. So, and that's probably a big part of the responsibility for why prices have held so long. But I just don't see that lasting long term.
In 2025, we're going to be in transition. We've already discussed a lot of what's going to happen. Give me three things producers need to be watching here in the first quarter of 25 to just make sure I'm protected and to make sure that, I can weather whatever happens as best as I can for my operation.
Yeah, yeah. If we get into a real general perspective and we look at, markets getting back to, war free, black swan free, weather free markets, and we just get into typical trading ranges, you gotta be wary of the downside, right? So um, we're big on forward pricing, utilizing forward contracts and basis contracts, and we're I guess really outside of predicting black swan events, we're just looking for any weather disruption. Obviously, going into the year, the biggest thing to keep an eye on is South America. They've had no issues going into the end of the year. Do we see any signs of dryness that would impact the South American crop with the U.S. With wheat? We've at the time we're having this discussion. There's talk about the Russian wheat crop is in really bad shape. Well, then today I read that maybe that's overstated. So that's something to watch for. It sure hasn't seemed to impact the markets as of yet. So maybe there is some truth to the fact that that concern is overstated. So that's something we're watching for with the wheat market. Um, Corn, like I said, we feel like that's on the most stable ground, the most solid ground. And so we're watching for there is to see that the demand continue to be there. And we think it will be. And we think Trump will be favorable for the ethanol market, and we'll continue to see demand there. And yeah, we'll see what happens
It
with
doesn't
acres,
make
right?
you don't get concerned about the chat about more help for oil than for ethanol?
That's the natural inclination, right? Because Trump talks about drill, baby,
Drill,
drill, right?
baby.
So
Yep.
is
And if
that
that
is
crude
that
oil
is that
market drops out, yeah, we're in trouble.
yeah, yeah, exactly. So is that all because Trump just has a fondness for the oil industry, or is it just something he knows we have a lot of, and he's exploiting a strength of ours, right? So that kind of gets into the same thing as we have with soybeans. So since you're trying to please two different industries and promote oil, but also you don't want to damage your agriculture and the corn market because of flooding the market with oil. So we have to have to find really trade partners, and that's why you really can't risk losing sales to Mexico, which is again why I don't think there's anything to any real threat there with Mexico. But yeah, we got to find buyers for corn as food and feed, as opposed to just expanding our use of corn for ethanol and for fuel.
All right, Josh, if they want to get a hold of you at Hedge Plus, how do they do it?
All right, so I talked to you earlier about and one of my jobs was coming in our website it was two websites. It's one. It's hedge-plus.com. But perhaps by the time this airs, that our website is really, really close to the finish line of being updated. So there's that. We're also on X at, like I said, at Hedge Plus WI. And then we also we started doing videos, YouTube, and same thing. Hedge Plus is our YouTube channel. So you can find us there. But honestly, the best place to start is just follow us on X, because I'm putting out a lot of stuff every day on X.
All right, Josh, I appreciate your time. Thank you so very much.
Thank you, Paul.
Next time when you log into this podcast, we have what is going to hopefully be a regular segment where we tell you about some of the ways and things that we do to get the Market to Market TV show from a studio to wherever it is you consume it, whether it's on your phone, in your ears, on your television. Julie Knudsen will join us. She will help break down how we do things from a technical standpoint, and I'll try to navigate us through and not make too big of a fool of myself. Spoiler alert, there's no saving me for that. We'll see you next Tuesday. Feedback for me or ideas on segments you want to see, hit them up at market2market@iowapbs.org. I'm Paul Yeager. We'll see you next Tuesday for the MTOM podcast.